Let's be honest, real estate investing kind of sucks right now. Rates are high, deals don't pencil, and banks are making it harder than ever to qualify. But here's the thing, most successful investors are still getting deals done. And I want to show you today in 3 steps, starting with section number 1, why the market feels so bad right now. Real quick before we get into it, my name is James Miller. I've specialized in working with investors for the last 3 years and closed hundreds of deals with investors all over the country, from Portland, Maine down to here in Miami, from Alaska down to San Diego and everywhere in between. Now let's get into it. The biggest thing that has changed with the math of it all since rates have went up is that obviously the payments have went higher and making it harder to cash flow these properties. It's either going to put in a burden on the investor themselves to carry that lack of cash flow. And if you want to qualify with something, say like a DSCR loan, then you're not going to, or you're going to get worse terms by trying to get into a deal that doesn't cash flow. So the biggest issue right now is that with the rates being higher, it's just driving up the payments, which is on the non-investor side a thing as well. People aren't buying primary residences right now because they just flat out can't afford it. And right now, if you're trying to get into the game, sellers realistically are not willing to take a cut on their properties. Some of them are, but a lot of them are refusing to do so, and they're just pulling their properties off the market. The reason I know this is actually a lot of my clients who are trying to sell their properties that they bought, they rehabbed, and they're trying to flip them, they can't flip them for the price that they want. So what do? They're coming back to me and having me refinance the property, pulling the cash out so they can go make another move while they rent out that property to somebody for the long term, thinking that they'll eventually get rid of the property in maybe 3 to 5 years. The banks are creating the most friction right now with their guidelines. They really tightened them up about 3 years ago when the market started to really increase the interest rates. They're starting to loosen up now, but they're still tight, right? And the reason why is because not only are they making sure that the numbers pencil out, but they want to make sure that the person they're doing business with has a good financial situation. And so some of these rules and guidelines that are very complicated, or there's a lot of things that you wouldn't think are a big deal, but they'll trip you up, happen. So that's why we really dig in with our clients to go through a legitimate submission checklist sheet of every single meaningful guideline to make sure that our clients don't hit those during the process, or we prepare ourselves for those so we can get the loan to the finish line. The investors who are being impacted the most by the current market is for sure the commercial investors. I think that's going to flip. There's ultimately going to be deals in the future for those people. But right now, the lenders just don't like commercial properties. They think there's a high level of risk on them. So it's a lot more harder to find good deals, and not even find good deals, but find good deals that can qualify and get to the finish line with lenders. The other people who are getting really impacted by these loans or by the market are fix and flip people. People who like to buy a property, rehab it, and flip it. They're getting impacted because, first of all, the values are so high that there's not as many deals where they can come in, scoop them up for cheap, and flip them to what they think are going to be a good deal down the line. The other issue is that they can't flip them. What happens is they're buying these properties, rehabbing them, and they're trying to flip them, and then they can't get the property to sell. And so what's happening is these people are once again coming back to me, or people like me, to say, hey James, I couldn't flip this property. I can't get the sales price that I've wanted, and now I need you to refinance me, get me my cash out of the property so I can go ahead and do another deal, continue to grow my portfolio. This actually has been happening for basically 2 years now, at least, maybe 2.5 years, of people consistently coming back to me because they can't sell the property. The difference is now, when this was initially happening, it was mainly happening in like Texas and say Florida, but now this is happening all over the country. That brings us to section 2. Let's talk about who's actually winning in this market. At the end of the year, a lot of people in business and in investing slow down. Here at the end of 2025, most people are telling me right now, let's wait till 2026. But a lot of my top clients, that's not happening. I have multiple clients right now that have multiple deals in with me, and we're gonna fund more deals in the month of December when everybody else is slowing down than we have all year. How do we do this? My clients find good deals. We pencil out the numbers together. We have a dialed in process. In fact, I have a client right now who a few months ago, I think I've done 13, 14 deals with him just in the last year and a half, 2 years. He accidentally missed a payment. For a minute, we thought, man, we're gonna be in some serious trouble. We were able to work with him, and since that moment a few months ago, we are churning out deals. We just funded 2 deals last week for him. We're about to put in another 2 deals for him before the end of the year. Just because of your situation, maybe you missed a payment, maybe you can't find a deal, or you think deals can't work, don't let your situation necessarily hold you back. Reach out to me, click on the link below. We can go over your scenario. If we can help you right now, it's great. Let's make a move. If not, we need to plan this thing out to be 3 to 6 months down the line. then that's how it goes. But I'm more than happy to speak with you about your situation and see what options we have available. The people who are still closing deals in this market are ones who are taking it seriously as a professional. If you are going to be a novice in this, you're not going to be able to get deals or as many deals done because first and foremost, there's not that many deals out there. The values are high, the rates are higher, right? And so because of that, the numbers don't pencil out on most deals. Most markets are really good, and when there are people can really jump in is when the values come down. The properties are seen as a value, can come in, fix up the property, and as the market continues to go up, they can then flip those properties. We're not in that situation right now. So anybody who's coming in and thinking that they're gonna come in and fix up and flip their first deal, not likely, right? Realistically, the people who are doing better than the average person are the ones who have more experience because they know what to look for in the deals. As they're scrubbing through or they're getting referred opportunities, they know what is a good opportunity and what's not. They also know how to make the most out of the opportunities. Right now, I've seen more people over the last couple of years do things like add an additional unit, build an extra room in the property. They're doing things to create cash flow. They're doing things to make the properties more valuable. And so then that way, when they go to rent it out, they're gonna be able to rent it out for more. The one thing you have to keep in mind though is the financing does come into play. I think these people that are above and beyond the rest, they are already thinking about their exit strategy, right? Most people, when they're first getting in, they have very optimistic, right? They get in and they're like, I'm gonna buy and I'm gonna fix up and I'm gonna flip this property, I'm gonna make all this money. The investors who are professionals, they start thinking about multiple exit strategies. Some of them would prefer to buy the property, fix it up, and flip it. But at the end of the day, if they can't, they know they have to have an exit strategy, say of refinancing the property and getting out of it, trying to pull as much cash as they can so they can go do their next deal. So you have to have multiple exit strategies, or at least a couple of exit strategies to get out of that deal. So here's what we're doing differently to get deals done and make sure our investors are winning in this market. So what I've learned over the last 3 years working strictly with investors is that we have to be more dialed in. When I say we, I meant me as the lender, me, my team, my assistants. When we're scrubbing deals, we need to be more of a professional and really understand these rules and guidelines at a high level. We need to know the right questions to be asking the investors. We need to not be afraid to ask the questions to the investors to make sure that the package that we're delivering to the lender at the end of the day is good and gonna get us through the finish line without having a bunch of headaches during the process as well. And the thing is, the products that are probably working the best for people right now are DSCR loans. The reason why is because at the end of the day, there is no tax returns that are required for people. There's no personal income documents. The lender's just qualifying based on the rental income of the property. If the property can cash flow, the lender will do the loan. So the thing is that we utilize DSCR loans to make the math simple. Rent minus payment. The payment is principal, interest, taxes, and insurance, sometimes the HOA. If that's enough, the lender will do the loan. Let me give you a quick example. Let's just say that the rent in the area is $3,000 a month. Well, if the rent is $3,000 and our payment after crunching the numbers with you is gonna be $2,750, well, we know that there's $250 in cash flow. The lender will go ahead and do the loan. It doesn't even have to be that much. It literally could be $1 and the lender will do the loan. Obviously, we want as much cash flow for you as possible. Actually, some of my clients don't care about that. They just want the most cash out of their property so they can go make another move. But that's up to you. You as the investor get to make that decision. But once again, this all comes from being a professional, taking your stuff seriously, knowing what's going on in your business, because at the end of the day, real estate investing is a business, okay? If you start looking at it as a business, I promise you, you'll be more successful with it. And when my investors are stuck or they don't know which way to go, I think the best thing that we can do is talk about a couple different things. One, if we're having an issue, say for instance, cash flowing in their area, we start looking at multiple units. So instead of like a single family home, we start looking at duplexes, triplexes, and quads. I can't think in my mind right now where I had a duplex, triplex, or quad not cash flow in the last 3 years, even with the rates where they're at. It didn't even matter necessarily where the value of the property was. If we had multiple units, the property cash flowed. So that really re-emphasized in my mind that the more units, the better, basically. The other thing that we started looking at was, is there another way to rent out the property? So instead of focusing strictly on, say, even had a single family home and we're gonna rent out the property to a family, that's great. Could we looking at doing it as like a boarding house? Is it a really big home with multiple rooms? Can we rent it out by the room? right? Is Airbnb or short-term rental a possibility in that area? Are we gonna be able to make more money by doing a short-term rental versus the long-term rental, right? Another option, this is when people are very serious, sometimes your market is not the best market, and that's okay, right? Sometimes it's gonna be tougher to find deals in your area. Expanding outside of your area is an option. I have clients who will invest in properties all the time in different states that they don't live in. Now, if it's your first deal, probably not the best idea because you need a little bit more hands-on. But if you're wanting to expand your business and take this seriously, go to Ohio, go to South Carolina, go to Georgia, go to Alabama, go to Pittsburgh, Pennsylvania. These areas have phenomenal cash flow and you don't need a lot to take in. There's also data showing right now that those areas are starting to grow in populations. People are moving to those areas. You have to start looking at different options. Of course, you want to stay in your market if you can, but if not, there's a whole country out there and you can hire property managers. You can even partner with other investors who maybe are in the area and can help you manage them yourself. To sum up this video, you have to be a professional and you have to be creative. You have to start getting more creative if you want to start generating more money on this. To be in this game for the long time, things are going to change, and so you have to change with them. If you want help getting your next investment deal structured and funded, click the link below. Let's go through your scenario. Let's create a customized thing for you. Thank you guys for watching. Check out this video here where I share the property investment strategy banks don't want you to know about. See you guys on the next video.